everybody. Welcome to another life insurance video. This is Chad McMahon with Protect with Insurance. Now, this topic is what are the absolute best mortgage protection insurance companies? First of all, what is mortgage protection? It's an optional insurance to pay off the mortgage in case of your death. Now, these have a ticking clock on them. Mortgage protection is going to be structured as a term, so it's a length of time, typically 10 to 30 years. But these policies are drastically decreasing the foreclosure rates across the country. It's a very, very important kind of policy. And so it's something that you want to at least look into, price it out, see if it's something that can work for you. If you're thinking about a spouse, another family member, or even a friend, make sure you bring them into it and just kind of have the conversation with them about, is this something that I should be doing? Is this something that would be helpful? And then you can always call in and get a quote. So that being said, there are a lot of different ways that you can structure these mortgage protection policies. But there's one way that's worth mentioning, and it's oftentimes it slides through the cracks and it's missed. There's a mortgage protection policy that is called, it's a full return of premium mortgage protection policy. You don't see it that often. It does cost more in terms of your premium to get it. But every penny of your investment that you put into the policy, over, let's say it's a 30-year policy, every payment that you put into it, 100% of that investment comes back to you at the end of that period of time. So again, that's called return of premium mortgage protection. And it's a great policy. If you can afford it, then you know that that's coming back to you at the end, but you have to stick to it. Typically, with these policies, you have to stick to it for the full course of that term. Now, there's a common question when it comes to mortgage protection, and that question is private mortgage insurance, PMI is the acronym. A lot of people think they already have mortgage protection. They say, hey, I have PMI, I have mortgage insurance. It's built in my mortgage. When I make my monthly payments, I'm covered, aren't I? And that's essentially the question. The short version is no. It's a very, very common misunderstanding. PMI, private mortgage insurance, is not the same thing as mortgage protection. PMI does not benefit you. It's required by you in order to get your loan, in order to get approved. But it's required by the lender because it protects the lender. So if something happens to you, they get basically a payment of a life insurance policy. And it doesn't pay off the mortgage. You still owe every penny. It's just that it covers the risk of if something happens. There's an actual calculatable risk to the lender anytime that a borrower passes away. And so it's the way to cover that added risk. They have a policy for it. So that's your PMI. Now, mortgage protection is the opposite of that. It benefits the lender in the sense that they get their money back because it pays off that loan, but it entirely is built to benefit you, the insured. Well, the beneficiaries of the insured. So you pass away, the mortgage is totally paid off, and your beneficiary receives that home owned free and clear with no mortgage anymore. Now, a lot of people, they can't, let's say you're looking at a husband and wife, something like that. You have partners of some sort, and a lot of times one of them passes away, the other will not be able to afford to stay there, and this solves that problem. So if you can budget in the cost on a monthly basis, quarterly basis, annual basis, then you have, sure, it's a little bit more strain now and for the course of that policy, but if something happens, you know that you're covered in full later. So that's a big deal. Now, when you're selecting your mortgage protection, you want to choose the following. Here's your short list of the things that are very important. You want to make sure that the insurance carrier, the provider, is A-rated. It's a very, very important thing. It's not about reviews. It's an independent professional rating. So you want to make sure they're A-rated. For example, all of the companies that we work with, and we work with a lot of them, they're all A-rated. If an insurance company becomes B-rated, they drop down, we drop them. We sever our contract with them. We will not work with them if they're B-rated. So make sure they're A-rated. Another one is make sure the policy is full coverage, meaning any kind of death that is not fraudulent, meaning intentionally self-inflicted suicide, things like that, but any kind of death is covered and it's going to take care of that mortgage, not just accidental. There are, believe it or not, a lot of mortgage protection policies out there that are purely accidental, so you got to be careful about that. You want to make sure that the length of the policy is sufficient. If it's 10 years, you want to make sure that 10 years is truly going to be enough. When you hit year number 9, year number 10, you might be wishing, I wish we had another 5 years on this, or I wish we had another 10 years on this. So you got to think ahead a little bit on that and make sure that it's long enough. The longer the policy, the more expensive it will cost month to month, but make sure you get it priced both ways so you can really look at that. Make sure it's sufficient coverage. That's a given. 99% of the time, that mortgage protection policy is going to be set up for the amount of the mortgage. That's a given. So as long as you do that, then you should be in good shape. However, sometimes, I would say this happens 10% of the time, where our clients have a plan in the near future where they're going to be getting another property, investment property, personal residence, whatever it is, or they're going to be rolling into a larger mortgage, refinancing. So you want to make sure that that is covered so that it's all squared away. You want to make sure that you get the best price. That's easier said than done. And there are two ways to accomplish getting the best price. One is you can call 30 different providers and you can feel it out, or you can pick an agency. It doesn't have to be ours. You can pick another agency, but pick an agency that is very high rated, has excellent reviews, strong testimonials, solid looking website. They've been around in business for a long time. No shenanigans. And you want to have an agency that's an independent agency, not a captive agency, meaning they pull from a lot of insurance companies rather than just from one. A captive agency is an agency that only works for one company and only has access to their products. And you're really losing out if you go with agencies that are captive agencies. And then the last thing is you want to make sure that you have living benefits protection built in your mortgage protection policy. The short version is that living benefits are ways for the policy to pay out entirely while you're alive. And it doesn't have to cost very much to have the added benefit of having living benefits. For example, here are some of the most common examples. If you have a critical health condition, chronic health condition, terminal health condition, these are all different categories of health. You have any issues in those categories, then some, or in most cases, all of that policy amount, let's say it's a $300,000 mortgage, they send you the $300,000, pay off the mortgage right then. You don't wait. Don't wait until death. So now you're living out your time with no more mortgage. And you know that that's already squared away. That is a big, big deal. So, and the last thing is you also want to make sure, just remember the last important thing, you want to make sure that it's going to be tax-free money. That is also very important. And all of the mortgage protection policies that we work with, they are not taxed. So that's a very important thing. Otherwise, that's going to be some pretty serious impact that your loved ones are going to be getting. It's going to be financial problem number 17 on their list that they're going to have to deal with. So no taxation on that is something you want to look at. Now, another common question we get, is mortgage protection the same thing as a term life insurance policy? No matter what anyone tells you, the truth is, yes, it absolutely is. It's the same thing as a term life insurance policy. The only thing that's going to be unique about it is that mortgage protection is built from the ground up to take care of the needs related to that mortgage, rather than just getting a random, semi-random, or otherwise calculated term life insurance amount. It's going to be something that is built to take care of that mortgage. You can get it in addition to your life insurance. A lot of our clients do. A lot of our clients say they have a life insurance policy, they've had it for 10 years, and now they have a mortgage. And so what their frame of mind is, well, if I pass away here in the next 20 years, then that life insurance is now going to have to go towards mortgage, it's going to have to go towards all these other things, and that's going to be really hard for my spouse. It's going to be really hard for my siblings, my daughter, my son. So they get a mortgage protection policy as well. And so they know that that mortgage is going to be paid off, it'll be free and clear, and then there's also going to be this life insurance benefit. So bear that in mind, that is a very, very common way to go. Now, the last thing is, what are the best life insurance companies? And this, unfortunately, there's not a simple, clear answer. And the reason why is that there's no such thing as one company you always want to work with. That's why we work with so many of them. We work with a ton of A-rated companies. They give the best prices in the country. They have the best programs in the country. And so what we do 100% of the time is people share their information with us, age, health, smoker, non-smoker, build, things like that. And then we shop for them on this whole network of A-rated companies. So when we do that, more than 9 out of 10 times, we get the lowest price possible. And it's usually going to be with a company that has the best living benefits. They have the longest length of time, which costs more. In some cases, we're able to just blow people's minds by getting a full return of premium option built in. So that's the benefit of shopping all of these companies. So we have lots of them that we work with, American Amicable, Mutual of Omaha, Transamerica, Foresters Financial, Gerber. There are lots of these companies and a lot more that we work with on a regular basis, and they give excellent prices. So just reach out to us. We'll see what we can do for you. We'll pull a quote. Our average time on the phone with our clients is about 6 minutes. And we're happy to take as long as you need as far as answering your questions, pulling quotes for family members, whatever it is we can do for you. So I hope this has been helpful. You stay safe out there. Bye-bye.